What up, Hyperchange? Welcome to another episode. Today we are talking about Tesla's slow motion grand slam in business. All right, maybe that was a lame joke, but Tesla's literally been hitting a slow motion grand slam. The amount of money they're making, cash flow, revenue, profits. In case you missed it on Sunday, kind of breaking news. Tesla posted their delivery numbers for Q4 2021, how many cars they delivered in the quarter. If you're a Tesla investor, nothing more important to watch than this number. How many things are they selling? That is going to tell you how much revenue they're making, how much profit they're going to make, if the business is working, if it's growing, if it's shrinking, how they're doing, all depends on this number. Tesla posted an absolutely monster quarter in this number. Tesla posted an absolutely monster quarter. I got a bunch of charts. We're going to run through it now. Actually, what am I even waiting for? Let's just do it. We got no time to waste. So, okay, so this is just a little preview I made. So Tesla posts 308,000 on a Sunday. They put this on. Every other automaker is sleeping. Sunday morning, Tesla's non-existent PR team is grinding, probably Martin. So shout out to Martin and Tesla's IR team. They are awesome. They're on the ball. They put out their quarterly vehicle deliveries. Here is the PR. One second. Whoops. Oh, it's not letting me change that. Sorry, technical difficulties. Whoa. Okay, we're here. Okay, so 308,600 deliveries. This is insane. Why is this insane? Because this is 1.23 million units a year. This takes Tesla above 1 million units a year. This makes them a big sort of real car company, real producer in the leg of Volkswagen, Toyota. This is what the haters been saying for years. Tesla would never get to this level. Electric vehicles would never hit the mainstream. 1 million cars a year is the milestone to hit. Tesla's not only crossed it, but just jumped over it. Last quarter, they delivered 241,000 vehicles. In one quarter, we got 65,000 incremental vehicles delivered. Just to put this in context, I was estimating like 290. I always like to be conservative. The street was estimating around that. Nobody, like there was a period where Apple crushed its quarterly earnings numbers for like years in a row. I just remember this growing up. It was like every single quarter, Apple sells an insane amount of iPhones. They just had such a good product. The demand was there. It was all about scaling. It was sort of this slow motion grand slam of business. And that's what we're in for Tesla right now. They are already profitable. They're printing billions, and we're going to talk into how many more billions they're printing. But it's just, in slow motion, we're seeing the results of this capacity expansion and then just trying to meet the demand of Tesla's biggest problem, which is they can literally not build cars fast enough to sell them despite growing at 87% per year. So to put this in context further, GM, Mary led, right? We're all joking about how GM, Biden's saying that GM led the electric revolution. First of all, GM delivers 26 electric cars this quarter. Joe Biden's on TV saying GM led the electric revolution. GM delivers 26 electric cars this quarter. Maybe not fair because they had to halt the Bolt, but I would say that's their fault. Tesla delivers 308,600. You literally can't make this up. 26 vehicles versus 308,600. That's Tesla versus GM on electric. Rivian delivered 386 cars. By December 15th, they're ahead of GM by 10x in terms of electric vehicles. So very interesting. But anyway, GM's total sales, including gas cars, are 441,000, down 43%. Tesla's sales are 308,600, up about 71% year over year. Tesla goes up another 71%. GM goes down another 43%. Tesla will pass GM in terms of vehicles produced. And not only that, but in terms of revenue, Tesla's selling a much higher priced car as well. So if you factor that in, Tesla to me, probably by this moment right now, as we're watching this, is making more revenue per day than GM. And if they're not doing it today, they're going to be doing it in a couple weeks from now. So this is the moment in American history that we've all been waiting for. 100-year-old American automaker, legacy of Detroit, GM has now been surpassed by Tesla, the EV upstart. Epic milestone. Okay, now we got the charts. Now we got the fun numbers. All right, that was just build up. 308,000. This is just to put into scope. This is since when Tesla started delivering the Model S. You can't see me because I'm in your way, but that's when it started, 2012. This chart was nothing. I just love this chart because this is the beauty of Tesla's growth S-curve here, exponential growth here, not linear, but exponential growth. If you told me you had a business that had a thing that sold for $55,000 and you were selling 308,000 of those things, up 87%, I would be like, what? Like, this growth doesn't stop, it accelerates. So I think the most important takeaway from this chart is to see the slope of that curve, and it's much more exponential than linear, and that just kind of frames up why the market is so hard to wrap their head around Tesla's growth. 71% year over year growth. in deliveries, so chip shortage, all this stuff going on. Tesla builds everything in-house. This isn't software that's easy to scale. This is very difficult to scale, and they're growing at 71% year over year. So that's insane. Just even on a quarter by quarter basis, I kind of wanted to point this out because this is what blew my mind. I did not think Tesla had this in them. They crushed my estimates. And I always, if you see my numbers here and going forward, I always like to be conservative because I always feel like, why not be conservative? You're investing in a company, give them a little leeway to mess up and still have your financial model work to justify your, buy or sell price, right? So 28% sequential expansion is insane, right? Like, it's all good news if you expect less than if you give your company an easy target to beat, it's always all good news on the quarterly earnings, right? So I love to do that. But 28% sequential growth for Tesla to 308,000. I thought that was huge numbers. Annual basis, we're looking at 936,000 deliveries. Once again, the thing to note here is this exponential curve. That's up 87% year over year. Tesla's growing at 87% year over year, and there's reason to think they could grow at a similar clip this year, which is hard to wrap your head around. But just to put this in context, I'm not making this up. This isn't me speculating. This is just numbers that have happened. If you annualize Tesla's deliveries of 309,000 in Q4 times 4, you're going to get 1.234 million. So Tesla, and this is Q4 2021. We're in Q4 2022. So Tesla's already bigger than this chart you're looking at. But if you take the run rate from Q4, we are looking at 1.23 million vehicles. That's right. Tesla's already in Q4 at 1.23 million. In 2021, they delivered 900K. We are going to, my original estimate for this year is 1.4 million. That looks way too low given we're heading into the year at 1.23 million. Way, way too low. So, my Q3 number was wrong. Anyway, I thought this was insane. And all of this has to do with the Model Y. And I think when you think about the success of the Model Y, this is very important. And you may be like, oh, Model Y, best-selling Tesla. It's the Tesla I have. It's what Elon Musk and Tesla said will be the best-selling car in the world in a couple years. But I think this is actually, when you unpack what's happening at the boardroom level for Tesla, it's not like they know everything and they're planning every little day, years ahead of time. They're reacting as well to what the market's telling them. The market is saying, we want the Model Y so bad. There is such an insane demand for this vehicle. Tesla has almost stopped doing everything on their entire roadmap to just build more Model Ys because that's how many batteries they need. That's how the demand for this car is millions a year. According to my math, Q4, and this is shout out to Mo and Hypercharts, which has a dope announcement coming up. I don't want to give away much about that, but that might be my secret, might not. Okay, anyway, but Mo updates, and so we break down Model Y. I think this is based on Troy Teslike. Shout out to him. If you want the breakdown on Tesla's deliveries and estimates and regions and everything like that, follow Troy Teslike at Troy Teslike on Tesla Twitter. This is the reason why Tesla Twitter is amazing, is because there's people like him who spend their entire life predicting Tesla deliveries, so we don't have to, and it is it's amazing. It's insane the way he breaks it down, and I would follow him for all that info. But my point being here is the Model Y has crushed Tesla's expectations. They're dropping everything to focus on this vehicle. And I think we're going to go from selling potentially like I was saying, the Hypercharts estimates based on Troy Teslike said we sold about 156,000 Model Ys this quarter versus 140,000 Model 3s. This was the first quarter per our estimates where the Model Y surpassed the Model 3 in unit sales, and Tesla's been hinting at that. So I kind of think that's right, but that's a 600,000 year unit run rate. I think the Model Y is on the cusp of a million and a half unit per year demand. So Tesla's still trying to fill demand for this product they've just launched. They're still they're only a third of the way there, 600K to 1.8 million. So that's why when you say semi-truck, Cybertruck, they don't have the batteries, they don't have the time, and they still have people lining out the door for the product they already have in the market. So I think that's really important. I think the biggest change of Tesla's corporate strategy throughout the past couple months or year maybe has been a shift from all these new products we're launching to, oh my God, so many people want the Model Y. Let's take a step back, build out production lines for that at Fremont as big as we can, at Austin, at Shanghai, at Berlin. Nothing else matters because we have 2 million Model Ys a year to build. And that's, $100 billion in revenue at 50K a pop. And that is everything that Tesla's focused on right now. So, okay. Now we're going into the core. Okay, I don't really want to. Okay. I'm getting too ahead of myself. So if you saw it, so I crunched some numbers. 55. I assume the average selling price bumps up a little bit. I wanted to estimate the financials for this quarter. Now that we have deliveries, it's kind of in the bag. We know what the financials are going to look like. This is my best estimate for what Tesla will report in Q4. I think Let me take a sip before announcing. Okay. I think we are looking, this is per my model, $18.2 billion in revenue. I mean, it's just like, this chart makes me so happy because I'm such a finance nerd. So like, good numbers. I love good numbers. Tesla's posting $18.2 billion in revenue. It's going to be up like 80% year over year. This is putting them at a $73 billion run rate. This is slightly faster than the 28% sequential unit growth because I think they're delivering more S and X, higher ASP, and the ASP of everything I think is going up. Tesla actually raised a bunch of prices and has been to do with the supply chain and crisis and all that. But I think Tesla, and I don't know, just 18 billion a quarter in revenue. And we're going to get to this is why the stock has been soaring, because you can't keep your financial model up to date fast enough with how much Tesla's growing. Okay, so now in terms of profit, sorry, my camera's in the way. I think I have 2.8 billion there. So 18.2 billion in revenue, 2.8 billion in profit. And I always like to be conservative. So I'm genuinely thinking Tesla could beat these numbers that I'm telling you. 2.8 billion in profit is about a 15.5% operating margin. So that's about 1% higher than last quarter. So I don't know if that's conservative or aggressive, who knows, but Tesla's operating margin's been amazing. But that's kind of my estimate where I'm at right now. And, 18.2 billion, 2.8 billion. This is why I put in the title of the video, this is the blowout quarter. And you might, when this comes out, they might say, Tesla missed estimates. Analysts said this, Tesla was going to do that. Tesla was going to do this. None of that matters. Nothing matters except this chart. Is revenue going up? Is profit going up? You want to see through all the noise and just look at the data that Tesla themselves reports. And that's the way I look at every quarter. So whether or not they beat Wall Street, I don't care. Wall Street's probably going to try and get smart with it. They already saw the delivery numbers come out, juice out their models, probably overcorrect, and then Tesla might miss estimates. I don't care. Either way, this is a blowout quarter for Tesla. This is up 80%. This is the most revenue they've had in a quarter by far, not even close. The most profit they've had in a quarter by far, not even close. That's a company that's doing well. It's hard to just put into context how fast Tesla's growing. When you think about this is this $1.3 trillion thing that we have that's Tesla. It is growing in intrinsic value so fast, so quickly. That is why there's not a chance in hell I'm selling any of my stock, because this thing is growing so fast. There's no limit to this. Elon Musk is in his prime. Like, the technology of the battery and the 4680 cell that Tesla's been doing all the hard work to commercialize hasn't even made its way into the financial statements yet, and it's going to take years to do so. So I just don't want to miss that ride. And if you look at Tesla's Q4 numbers, just times 4 to the Q4 numbers that I put in the last slide, we're thinking Tesla today, actually not today, because today is 2022 already. Tesla, as of the end of the year, was at a $73 billion run rate and $11.2 billion profit run rate. So when you say Tesla's, you're like, wait, Tesla at 1.3 trillion is worth, 120 times PE ratio. Well, Tesla's PE, that actually doesn't seem that crazy to me. 100 PE ratio for a tech stock, especially when interest rate yields are zero, making the comparable yield for earnings on a bond is like nothing. So where are you going to get yield? 1% for Tesla earnings, especially adjusted for growth. This is growing faster than 100%. You could even argue there's about a 1 PEG ratio on Tesla stock right now, which is the Peter Lynch method of saying you're fairly valued, essentially. Price earnings over growth. So if our price earnings ratio is 100, but we're growing at 100%, 100 over 100 is 1, the PEG is 1, that's a fair value. Now, there's lots of flaws in the PEG model, but I just wanted to kind of highlight that if you adjust for the growth that we're seeing of Tesla and assume that growth will continue, then the equity price it's hard to say that it's irrational, especially given everything else in the market right now. Okay, Tesla's 2022 guesstimate. This is just what I'm guessing for 2022. This is, and once again, like I said, I always want to be lowballing. I always want to be more conservative than the company reports, because that gives me upside as an investor. So in my financial modeling, I always try to be conservative. That always makes it, you're going to invest safer if you're conservative and always expecting your company to lose more money than they're going to lose, because then your analysis of, are they going to go bankrupt? What's their solvency look like? Is always going to have that buffer. So $90 billion in revenue. I think this could be a low ball, but this is what I'm kind of just ballparking. $14 billion in profit for this year. So that means if you take the $1.3 trillion valuation times this year's profit, we're only at 90x, and this $14 billion number is over 100x. So the PEG is actually like 0.7. And even though the price sales ratio looks insanely high at 12x for an auto company, well, that's because Tesla's the only auto company to hit 1 million units sold with 16% operating margins. Those are gross margin numbers for most automakers. Tesla's putting up as op margins. So This is the X factor that's driving the growth. This is what drove the growth in the quarter. Fremont's maxed out, but Shanghai, Tesla in China, halfway around the world from at least where I am right now, is going gangbusters. 70,000 cars in a quarter in China. This is excluding exports. This is excluding exports. So 70,000 cars, let's say they only built 10,000 for export. Last month it was 20. That's 80,000 cars. 80,000 times 3, 240,000 cars a quarter from China. We just delivered 308,000. Fremont's at 100,000, 125,000 a quarter. So you're telling me we're at 240,000 a quarter in China, 120,000 a quarter at least in Fremont. I mean, what? We're already at 360, 370,000 a quarter in terms of production, which is already 1.5 million. You know, so when you start, I don't know if these numbers are right. I don't know if they can continue at the current growth rate or whatever, or how fast, you know, whether it's going to keep growing or it's lumpy and we're going to see a pause in the growth of Tesla China. But the numbers we're seeing out of Tesla China is validating everything. Tesla China has become the biggest production house, the biggest production facility for Tesla. It's become a driver of revenue, a driver of profit. They're electrifying what is soon to be the world's largest economy. I think this is epic. But here's an interesting component to kind of quell all the good news. We got some interesting headlines today. It's part of the reason Tesla stock's down. Criticism over Elon Musk, you know, opening a showroom in this controversial region of China. But the interesting thing about all of this is Tesla electrifying China, just at a super high level. This is my take. You know, I like to get moral with it because I don't know. You got to invest with your morals, I think. So electrifying China will be one of the world's largest economy, if not the world's largest economy in our lifetime. And electrifying that economy, giving them electric vehicle technology and batteries and cars and selling them in every region in China to electrify that is actually helping the emissions around the world for everybody. So we're not living in a little box in the US and a little box in China. We need to electrify everything. I am the biggest fan ever of Tesla doing whatever they have, screw politics, to spread their technology everywhere. I think that's super important. And frankly, I think there's been a huge win-win relationship between Tesla and China, which is they're desperate for electric vehicle technology, but they have 1.4 billion people. Tesla's like, we're going to sell you all our technology and make a bunch of money from it and use that to pay our American employees. And then that's called trade. And that's why trade's a beautiful thing. It's the only free lunch in economics. And so I think Tesla in China it's a huge reason of my financial growth expectations, but this is a risk. This is a headline risk. Biden and the administration do not like Tesla because they do not bribe them with lobbyists. This is a risk. I almost would say Tesla should spend a couple million on lobbyists just to check that box so we don't have to deal with this shit. But the point is US politicians will build criticism towards Elon Musk, and Elon Musk is a billionaire and him not paying taxes. B, on Tesla making money off China, which is ridiculous because all of our iPhones are made in China. China's like the biggest way Apple makes money. The world economies are too interlinked. You know, and I think that's actually the greatest strength and my greatest, I'm getting kind of off topic, but my greatest source of optimism and belief of the global financial system is that we are interlinked, is that China and the US are both stronger together than they are apart. And that incentive system will create a level of peace, at least that's a baseline level of peace that's good. So that's what I hope happens. Anyway, I'm getting sidetracked. Let's keep moving on. Tesla, Texas. This is some tweet that kind of went viral on Tesla Twitter, and I think it's kind of been cropped. Like, these are the tweets that you read that, like, isn't in the mainstream media. It doesn't seem legit, but it's just like some Tesla nerd who's actually been following it, and these are the things that I feel like are always right. And so, the rumor, and this fits with everything I've been reading. The rumors are Tesla is on the cusp of starting production at Texas, also at Berlin as well. But this is news imminently. This Tesla Texas thing is going to be pumping out cars in Q1 potentially. So that's super duper exciting. Tesla Texas is booming and is about to be pumping out cars. Tesla's got 2 factories coming online at once, Berlin and Austin. Ooh, look at that focus. Cool. Okay. Cybertruck. This is the biggest question heading into 2022. Will we get the Cybertruck launched? I believe they took it off the website for orders. I don't know. Tesla, this to me, I think there's a lot of risk here. And remember what I said earlier, focus on Model Y, not Cybertruck. They're going to make this perfect. They're going to wait till they get the 4680s. They're not in a rush to get the Cybertruck out the door. I still am kind of on the side that this is going to get delayed towards later in the year, but who knows? Oh, that's it? Okay. Oh, there was one comment about the robo-taxi that I did want to say, which is Elon Musk is set to be on the quarterly call. So screw all of the financials I just told you about. Those are nowhere near as important as Elon Musk being on the quarterly earnings call. Because why are quarterly earnings calls so important? They're going to tell us the financials. Is it 18 billion in revenue? Is it 18.4 billion in revenue? Who gives a shit? It's still about 18 billion and a great quarter. So that's not what matters from the quarterly call. It's about the product roadmap that Elon Musk is about to give us. So Elon said he's going to be on the call. He wasn't on the last one. He's not normally on conference calls, but he's going to be on this conference call because he has shit to say about the product roadmap. So that's super exciting because we are going to get material alpha, not about the past financials, but looking ahead, not in the distant, not behind us. And I think we're going to have Cybertruck news. I think we're going to have Robotaxi news. I think we're going to have FSD news. I think we're going to have Tesla Semi news, Megapack news. Elon is, I don't know. I'm really excited because I always try and listen to what Elon says, read in between the lines about his commentary, because that always has the value. It's not even just what he says, it's how he says it. It's what he doesn't say. It's what words he uses. All of that matters when you're going full CIA agent trying to read Elon's mind as he puts out the shareholder commentary on the conference call. So that's what I'm hyped about. And I do have a bunch of videos coming out in between now and Tesla earnings, which are in about 3 weeks. But this is my preview for Tesla earnings. 18.2 billion in revenue, 2.8 billion in EBIT. I hope those are low balls. I'm going to be covering this with live streams, with all that stuff. Subscribe if you haven't already. And yeah, let me know what you think in the comments below. What are you expecting from Tesla earnings? What do you want to hear Elon say on the call? Let me know in the comments. Actually, I have a good idea. This is going to be dope. We're going to do a contest. Who can get the closest with revenue and EBIT to Tesla earnings? And I will send you a Hyperchange hat. I just decided this. Out of these 420 hats, I still have like 10 of them that I didn't sell for like giveaways and stuff. I have one. I'm going to give one to the person who comments with the closest guess of revenue and EBIT. We'll figure out a way to average it out that Tesla does. I don't know. This is fun, right? It doesn't matter. Who cares what they actually report, but it's fun to guess. So let's make it a game. Comment below on this video. Revenue and GAAP earnings before interest and taxes, GAAP operating income. Let me know. Let's just see what happens. But the gist of it is, if you're owning Tesla stock and you're an investor in this company, they're selling more cars than ever. They're hugely profitable. The growth is outpacing what the most excited analysts could even fathom that Tesla would do. And this just bumps up the trajectory of how soon they're going to be selling 10 million cars. It's going to be happening, in 20 quarters, not 24 quarters. And all of a sudden that carries forward the cash flow. Wall Street freaks out, updates their models. That's why the stock was up 13% on this news, because it matters. And the intrinsic value of Tesla's growing as they deliver more cars and make more money on each one. This is Hyperchange. Love y'all. Thank you for tuning in. Huge shout out to our Patreons. I'll see y'all next time. Peace.